And then finally, we have monitoring of controls. So this is the last component of our client's internal control. So this is a process that assesses the effectiveness of the internal control performance over time. So all the other components of internal control, to assess their effectiveness, the client should monitor them. So it includes assessing the design and the operation of controls on a timely basis and taking the necessary corrective actions modified for any changes in conditions. So the different type of monitoring controls include ongoing monitoring activities and separate evaluation. So when we say ongoing monitoring activities, these include the regular reporting duties, so reviewed by appropriate level of management. So for example, the requirement on the part of the client personnel or employee to submit a periodic report of his or her task, so is part of ongoing monitoring. So communication or interaction from third parties, like for example, the sending of billing statement to customer. So that is an example of ongoing monitoring. So because let's say the bill contain incorrect information, so the feedback from the customer would tell the client or the company that there is something wrong with their billing process. So we also have oversight of supervisory personnel. So the fact that a client personnel or employee is subject to supervision or review, then that would provide a level of control on the part of the employee or personnel to be mindful of the tasks or processes that he or she is doing. So rather, we have trainings, seminars, meetings, and planning sessions are also part of ongoing monitoring controls. So separate evaluation. So what will be included here are those inspection type of controls like audits, no? So audits, internal and external, so independent checks are examples of separate evaluations. So finally, we have inherent limitation of internal controls. So no matter how good the internal control system of our client is, so there could still be misstatements or errors or frauds that still could not be prevented. So because of these inherent limitations. So example, cost benefit consideration. So controls would be implemented. So if the intended benefit is greater than the related cost. Another is the direction of controls. So the controls are normally directed to people or personnel at a certain level of hierarchy in an organization. So usually rank and file employees. So those who are more capable of, let's say, committing misstatements or higher level of misstatements, like the management, for example, are usually not subject to routinary controls. So they can override the controls. So another, we have human factors. So humans can commit error. So they can be affected by many factors like emotional factors. So therefore, mistakes and misstatements can still be committed regardless of having an internal control system. Okay, so it's also subject to collusion or overriding of control. So let's say there is a segregation of duty, then those two people work together to circumvent the control. So that would defeat yung purpose of that specific control. So even yung sa management related here sa second bullet point. So management level, so they can override the control. And controls are also subject to breakdown. So meaning to say, if they are effective at a certain scale of the organization, if for example the organization expanded rapidly, so the controls that work for their organization in the past, so could not be expected to work also in the rapidly growing expansion of the entity or organization. So because of these factors, so internal control system could still be not effective on preventing, detecting, or correcting material misstatements. Now let's go to the next part. So the next part will be our assessment of controls. So now that we understand the background or the nature of the internal controls of our client, so we have to connect it with our objective. Okay, so remember our objective is to identify potential misstatements, identify the factors that could affect the material misstatements, and to design the nature, time, and extent of our further audit procedures. So that is why our audit procedures include number one, understanding the accounting and internal control system of our client. So that's the reason why we discuss yung first part, the internal control framework, so that we will know the frame of reference upon which we will understand the controls of our client. And after understanding the internal control system of our client, we plan the assessed level of control risk. So remember in our discussion in planning and audit of the financial statement, so the combined risk assessment of inherent and control risk will ultimately determine our audit strategy. So we will determine the appropriate response to assess risk at both the financial statements level and assertion level. So we will also reassess control risk after performing, let's say, a test of control. And finally, we will determine the nature, time, and extent of our substantive test. The first step is to understand and document the client's internal control system. So remember that as auditor, we are only concerned on controls that are relevant to the financial statements assertion. So we discussed earlier that the internal control system of the client extends beyond those related to the preparation of financial statements. Okay. However, as auditor, we have to focus on the aspect of the client's internal control so that are related to the preparation of the financial reports or financial statements. So our objectives as auditor is number one, to identify the potential misstatements, identify factors that could affect the risk of material misstatement, and to design our appropriate audit procedure. So remember that we study and evaluate the internal controls of our client, not for the purpose of expressing opinion on those internal control, but to design the nature, time, and extent of our audit procedures. So because remember in our discussion of theoretical framework of auditing, the more effective the internal controls of our client are, then the less the possibility of the material misstatements from occurring, and therefore that could reduce the amount of our work. Okay, so on the other hand, if the client's internal control is not reliable or not effective, then that could lead to higher risk of material misstatement, and therefore that would increase consequently the amount of our work. Here are the steps that we will perform in understanding and documenting the client's internal control system. So the first step is to perform preliminary review. So we can refer to our discussion earlier with respect to internal control framework on how they apply in our client's internal control system. So we can check the control environment, for example, in our client. So review their risk assessment process, their information and communication system, their control activities, their monitoring activities. So as part of our preliminary review. So and then we can identify the transaction cycle. So these are the groupings of the client's processes. Like for example, sales and collection process. So that is one transaction cycle. Another would be the purchases to disbursement process, another transaction cycle. We also have the conversion cycle, inventory or conversion cycle or inventory or warehousing cycle. So that's the same. So we have payroll cycle, investing, and financing cycle. So these transaction cycles, no, the related processes will normally depend on the nature of our client's business. But those are the most common processes or transaction cycles that we can identify from most companies. So and then we document the system. So in documenting the system, we can use various documentation tools such as, for example, narratives or flow charting or using internal control questionnaires. Then we perform transaction walkthrough to confirm our understanding and the documentation of our client's internal control system. So under transaction walkthrough, we trace the transactions or processes of the client from origination up to the completion. So to validate again, so our understanding of the client's internal control system, so if correct yung ating documentation, and also for us to become familiar with uh, the different documents that the client is using in their processes. And finally, we identify which controls we can rely. Okay, so based on our understanding of the client's internal control system. So because those controls that we can rely, so those are the controls that we will be testing. So to justify performing or obtaining performing less substantive procedures on those systems where internal controls are strong. So because we said nga that if the internal controls of the system are strong, then we can reduce the amount of substantive tests on those area because they pose lower risk of material misstatement. So after understanding the client's internal control system, so the next step is to plan the assessed level of control risk. So take note that as mentioned earlier, because of the limitations of internal control, so there will always be some level of control risk. So this will be made at the assertion level for each material account balance or class of transaction. So remember, during our discussion of planning, particularly on materiality, we identify material account balances, class of transaction, presentation, and disclosure. So we will have to study the controls underlying them, so to determine the level of control risk. And our assessed level of control risk could either be set at a high or maximum level, or the control risk assessed is less than high or below maximum level. So when do we set control risk at a high or maximum level as our preliminary assessment? So we set our assessment at high or maximum. So high control risk, so meaning the controls are not reliable if number one, internal control system is not defined effectively. So based on our understanding of, let's say, the best practices and controls of that particular entity, so depending on the type or nature of this business, so we saw that they are not doing what they should be doing with respect to implementing internal control, then we decide that their internal control is not designed effectively and therefore set the control risk at high or maximum. Now, another scenario could be that the client is implementing a very complicated, for example, or sophisticated system. So in that case, evaluating that system will not be cost effective. So we will rely more on the performance of our substantive test. So in that case, we will set the control risk at a high or maximum level. So on the other hand, if based on our review, the client's internal control system is designed effectively, then we can set the control risk at less than high or below maximum level. So once we have made our preliminary assessment of control risk, so we will determine the appropriate response to our assessed risk. So in this case, we should determine our overall response to assess risk at the financial statement level and design and perform further audit procedures at the assertion level. So when we say response to assess this at the financial statement level, when we say financial statements level, we're looking at the environment, so at which the financial statements are prepared. So we are not yet looking at the details inside the financial statement. So because we will do that when we make our assessment on the assertion level. Okay, so depending on the risk that we have identified, so we will develop the appropriate response. So for example, when we say assess risk at the financial statement level, we mentioned it pertain to the environment at which the financial statements are prepared. So what will be relevant here would be, for example, the type of industry that the company is operating in. So the competence of the management, their integrity. So that is why some responses at the financial statements level could include the following. So we can maintain our professional skepticism. So for example, we assess that the integrity of the client's personnel or management would not be that good. Then we remind the team to maintain professional skepticism. So we can also assign more experienced or competent staff, or even engage an expert if the client is operating in a complex industry. So we can also provide more supervision, incorporate unpredictability in our audit procedures, and make changes in the nature, time, and extent of our audit procedures. Now, with respect to responses on assertion level, so it will depend on our adopted strategy. So for example, if our assessed control risk is set at a high or maximum level, as we discussed earlier, then our adopted strategy will be no reliance approach. So in this case, we will perform purely substantive tests. So, but if our preliminary assessment of control risk is less than high or below maximum, so because we believe that the internal control system is designed effectively, then we will follow what we call reliance approach or controls-based approach. In which case, we will test the control of the client. So that's what TOC stands for, and perform substantive test procedures. So this test of control will justify the performance of fewer substantive tests, for example. So we cannot directly perform lower extent of substantive test. We still have to verify whether we can really rely on the internal controls of the client. That is why we still need to test the control before proceeding to fewer substantive tests. So therefore, this part, TOC or test of control, is warranted by circumstances. So we do not always perform test of control. We only perform test of control if ever the auditor intends to rely on the internal control system of our client. So therefore, here the responses of the auditor with respect to risk on the assertion level would be the performance of further audit procedures. And we have two further audit procedure, the test of control and the substantive test. So substantive test will always be performed regardless of the approach, but test of control will be performed depending on the circumstances. Again, the auditor will perform TOC or test of control if ever he or she intends to rely on the control.